Financial market regulators in Canada have just cleared the way for the first Bitcoin ETF in the world. Here's what you need to know, coming right up on MoneySenseMedia. Hey everyone, this is Miles from MoneySenseMedia, and on this channel we talk about tips and tricks for your financial health. I want to take a few seconds to thank you for tuning in. There's a lot of choice and options out there on YouTube, but you're spending a few minutes with me and I really appreciate it. If you're new to this channel, please consider subscribing by clicking on the bell notification, sharing the video with a friend, and smashing the like button. Before getting into it, I want to put a bit of a disclaimer out there. I'm not a financial planner or a financial advisor. If you're going to make any kind of investment decisions, I highly suggest you consult with a financial licensed professional. So we've heard some great news today coming out from financial market regulators in Canada. They've just approved the first Bitcoin ETF in the world. It's going to launch on February 18th, and the ticker symbol is going to be BTCC. And now there are three reasons why this is really important. Number one, the securities are going to be traded on the Toronto Stock Exchange, the TSX. Now, this is the 8th largest exchange in the world with a market capitalization of $3.1 trillion. This really gives Bitcoin and digital currencies a lot of credibility on the market. Number two, if you want to purchase Bitcoins today, you'd have to do it through a digital wallet. Well, with an ETF, you can actually go straight to market without having to go through a digital wallet. And there are a number of advantages in doing that. The first advantage is time. Traditionally, if you wanted to purchase through a digital wallet, you would have to send money from your bank to the digital wallet. The digital wallet would acquire a cryptocurrency, or in this case, Bitcoin. And then when you wanted that money back, you'd have to make a request. It takes about a week or so, and they send it back to your original bank. Oh, and by the way, they charge a fee on your portfolio that can range between 1% to 3%, which is significant. With an ETF, you go straight to market, you buy what you want, and you sell right then and there on the market. So you could use platforms such as Wealthsimple, Questrade, E-Trade, or any other platform you're actually using right now to do your day trading. It's a lot simpler. And more importantly, for this particular ETF, the management fee is a straight 1%, which is quite interesting. Number three, there are no more Bitcoins being produced, which means that starting February 18th, more regular people can purchase it a lot faster and cheaper than today. Now, if you remember your supply and demand course from Economics 101, when people can acquire something that there's limited quantities of, the value tends to go up. Now, I want to be clear here. I think there are some significant risks with digital currencies as a whole. Bitcoin is a great example. Its value can fluctuate 40% in a single day, so I would never suggest you put all of your eggs in that basket. The second disadvantage, in my view, is that all the central banks have indicated clearly that they are going to come up with their own digital currency. And when that happens, we have no idea how existing cryptocurrencies, and in this case Bitcoin, would react. So what does this mean for you and me? Well, at a minimum, we should pay attention to cryptocurrencies. If you're like me, I really thought cryptocurrencies were a fad and that they were going to go away. Well, it doesn't look like they're going anywhere. There are a number of big organizations and companies that are actually accepting cryptocurrency as payments. I'm going to flash a few on the screen right now, but there are a lot more. The more important element is the move Tesla just made a few days ago. They've actually acquired $1.5 billion worth of cryptocurrency in Bitcoin, and they announced their plans to actually accept cryptocurrency as payments for their cars. Now, whenever Tesla does something, other people pay attention and they tend to do the same thing as well. Again, I'm not suggesting that you sell your house and you purchase Bitcoin. I'm just saying that you should pay attention to it because at a minimum, I'm definitely going to be paying attention to it. So in my personal situation, again, I don't own any cryptocurrency, but I am interested in dabbling in it. So I think anywhere between 1% to 5% of my entire portfolio should be exposed to some kind of cryptocurrency to get a sense of what this market is and what kind of upswing or downswing I'm going to be exposed to. So here you have it. I'd love to know if you're actually investing in digital currencies right now. If so, why are you doing it? And if not, have I convinced you that this is something that you should at least be paying attention to? Thanks for tuning in, and I'll catch you on the next one.